Hello traders, it's Tuesday, October of 24th. This is Alan Hong, market analyst of MY-GKFXPrime. So I'm gonna share my daily analysis through this video. And first of all, let's review the major market movements. So first instruments we're referring here is the dollar index in 4-hourly charts. So the US dollar index, which measures the greenback strength against the trade weight basket of 6 major currencies, it was held steady against other currencies on Monday, up 0.24% to 93.79 as investors look to who the next variance of China could be. So speculation continued about who US President Donald Trump will choose as the next leader of the Federal Reserve, with the Federal Reserve Governor Jerome Powell and Stanford University economist John Taylor being the leading candidates. So the greenback was boisterous as both candidates are thought to be more hawkish than current Federal Reserve Chair Janet Yellen, and Trump is expected to announce his decisions before November 3rd. Meanwhile, the single currency continued to fall, down 0.32% to 1.1745 on Monday, amid Spanish political uncertainty as the central government said it would trigger Article 155 and impose direct rule over the Catalonian government. The pound was down after Deputy Governor of the Bank of England, John Cunliffe, said the timing of a rate hike from the bank was an open question, so the pair GBP/USD was decreased 0.03% to 1.3101 on Monday. The Canadian dollar fell lower on Monday, with the pair USD/CAD at 0.13% to trade at 1.2645 after the wholesale sales from Canada, which are indications of consumer spending, which rose more less than expected in August. And the dollar traded at 3-month highs against the Japanese yen, with USD/JPY rose 0.14% to 113.69, as traders expected the Bank of Japan to continue its loose monetary policies measures after Japanese Prime Minister Shinzo Abe won a snap election for his party. So the positive start for the week for the greenback comes on the back of strong gains against the yen after Prime Minister Shinzo Abe ruling Liberia, the Democratic Party-led coalitions won a 2/3 parliamentary supermajority that gave him a fresh mandate to continue efforts to revive growth with a mix of ultra-loose monetary policies with spending and reform. Having a tad in commodities markets, gold price was gained in Asia on Tuesdays, rose 0.27% to $1,284.36 a troy ounce, with a weaker dollar aiding buying sentiments in the physical market. So the US dollar index was fell 0.16% to 93.57. Overnight, gold price were roughly unchanged on Monday as dollar strength continued to wait on upside momentum in the precious metals. So in what was a quiet day of top-tier economic data, gold prices came under pressures on sign that sentiments on the dollar is turning positive after data show traders continue to unwind their bearish bets on the greenbacks. So speculators pair net bearish bets on the dollar to their lowest level in more than a month. This is according to Commodity Futures Trading Commission data show on Friday. So the precious metal has struggled to pare losses since falling below a key price level of $1,200 amid signs of progress on tax reform and growing expectations that the US Central Bank will hike rates later this year. According to the Federal Reserve Rate Monitor tool, nearly 100% of traders expect the Federal Reserve to hike interest rates in December. So gold price is sensitive to move higher in both bond yields and the US dollars. A stronger dollar makes gold more expensive for holders of foreign currencies, while a rise in the US rates leave the opportunity cost of holding non-yielding assets such as bullion. Oil prices inched up on Tuesday, with US crude up 5 cents at $51.95 a barrel. So it is getting support from a decline in oil exports from OPEC's second biggest producer, Iraq, and a projected extended fall in US commercial oil stocks. So Iraq oil exports have fallen more than 200,000 barrels per day so far this month, as shipments from both north and south of the country declined. So crude oil exports through the Iraq Kurdistan control pipeline to the Turkish port of Sihand rose 13% to 288,000 barrels per day on Monday. But that was still less than half normal levels due to tensions in the regions, a shipping source told Reuters. So Iraq could still boost softened exports in the rest of October and plans to do so. And Iraq Oil Minister Jabal al-Wahbi said on Saturday softened exports were increasing by 200,000 barrels per day to make up for the northern shortfall. So US Secretary of State Rex Tillerson urged the Iraq government and the Kurdistan regions on Monday to resolve their conflict over Kurdish self-determination and disputed territories through dialogue. So the drop in supplies from Iraq comes as the Organization of the Petroleum Exporting Countries, Russia and other producers are cutting output by about 1.8 million barrels per day until March 2018 in an effort to drain the glut and support prices. In September, OPEC and non-OPEC countries achieved the highest compliance on planned cuts since the deal kicked off in January at a rate of 120%, so helping reduce oil stocks for the Organizations for Economic Cooperation and Development Nations, according to OPEC. So meanwhile, US crude inventories likely fell by 2.5 million barrels last week, while gasoline and distillate stockpiles each probably fell by at least 1.5 million barrels, a preliminary Reuters poll showed on Monday ahead of data by the industry group of the American Petroleum Institute later in the day. So the US oil rig count fell 7 to 736 in the week of October 20, the lowest level since June. This is according to the Baker Hughes data show on Friday. And now we're going to reveal the highlighted economy data that released on Monday, as well as today focus data and events. So yesterday, Canada has released its wholesale sales, for August, which show a result at 0.5% growth, which is disappointed when comparing to the focus of 0.6% growth, right? As for today, we can focus on this data in order to assess our trading, which is the European Union is going to release its manufacturing PMI during the European trading hours, right? And during the North American trading hours, the United States is going to release its manufacturing PMI for October as well. And the last data tonight, it will be the estimations of the weekly crude oil stocks from the American Petroleum Institute of the United States. Its technical analysis sessions, so first instruments we're referring to the Great British Pound against the US dollar in 4-hourly charts. So the sterling fell lower on Monday after the Deputy Governor of the Bank of England, John Cunliffe, said the timing of a rate hike from the bank was an open question. So the pair GBP/USD remain traded in a downtrend structure, but currently hovering between the both moving average lines in 4-hourly charts, signal to be traded flat in short term between 1.31 and 1.32. So only with a closure lower than the previous low at 1.302 will open up a door for further downside and extend the downtrend. So the next support level we could refer to 1.297. On the upside, the first resistance level comes in at 1.326. While the single currency continued to fall on Monday amid Spanish political uncertainty as the central governor said it would trigger Article 155 and impose direct rule over the Catalonian government. So against the dollar, currently traded a tad below the resistance level of 1.176 and remain in a downtrend. This week looking forward for a closure below the previous low at 1.166, which will provide a signal for continuations of downtrends and could fall further towards the next support level at 1.16. And while Germany is still to release its manufacturing PMI later today during European trading hours, which may provide further clue on the economy's strength. The dollar traded at 3-month high against the Japanese yen as traders expected the Bank of Japan to continue its loose monetary policy measures after Japanese Prime Minister Shinzo Abe won a snap election for his party. So the pair USD-JPY retreated soon after it broke out from the recent high at 113.4 and currently hovering near to the levels. So the both moving average line in 4-hourly charts were expanding upwards, signal to remains the uptrend structures. So we could refer the next resistance level at 114.4, and on the downside the nearest support level we could refer back to 113.5. As for commodities, gold price was gained in Asia on Tuesday with a weaker dollar aiding buying sentiment in the physical markets. So looking into its 4-hourly charts, it is hovering a tad below the resistance level of $1,283 and remain in a downtrend. Thus, the next support level we could refer at $1,261 and resistance level can be seen at $1,297 a troy ounce. And oil price inched up on Tuesday, gaining support from a decline in oil exports from OPEC's second biggest producer Iraq and a projected extended fall in the US commercial oil stocks. So the US West Texas Intermediate benchmark was hovering a tad below than the previous high of $52.80 a barrel. So closing above $52.80 will suggesting for further upside and continue the uptrend. So the next resistance level could be at $53.70 a barrel, and on the downside, the nearest support level can be seen at $51.20. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.